always shocked when I tell them that there is a way to build your business, right? Picture this, you're a creator, you're building your business. There is a way for you not to pay taxes while continuing to grow that business. And the equation is simple. Simple, yet very important, and we're going to talk about this today. If we're meeting for the first time, my name is Ronnie, Canadian US CPA, specializing in the creator industry. So you've been looking for a CPA that speaks directly to you. You found me, the algorithm is working. Let's talk about what Tone is doing, AMP's consumer product, what they're doing right, and how you can apply it as well. Tone is a consumer brand built by AMP that is on track to make a ton of money and keep a lot of money. All right. They have made $30 million in revenue, but they continue to reinvest everything into the business. They do this for two reasons. One, when you operate at a loss, you obviously avoid taxable income. You cannot be taxed on a loss. And for two, when your business is starting out, it is so important for everything to be about the gross margins. So they are reinvesting back into the business in the form of inventory on the balance sheet, assets that they're going to sell in the future. Because the most important thing at the moment is for the business to operate well. And I want creators to understand this simple concept where earlier on, you should not be necessarily focusing on tax planning and tax reductions, but it will happen on its own if your mind is in the right place with your creator business. As you create the content, as you monetize, and as you discover your revenue streams, you will find that by continuously reinvesting into the business to improve either the content or the distribution of your business items, anything you're selling, focusing on those will ensure that you're never overpaying on taxes. And you'll find that ultimately you're keeping your taxable income low, but your equity steady grows up because your name gets bigger, your personal brand gets bigger, your partnerships, your Rolodex gets bigger. As the equity goes up, equity does not get taxed annually. That's wealth. Tone is doing the same thing where they're not even paying themselves. They're not even incurring tax on this. And guess what? Without this tax expense, it's more cash flow for them to reinvest furthermore into the business. So it becomes a cycle. The main takeaway for Tone is that eventually, once they do want to reap the benefits, they can do so by selling their stake. And as we've talked about in a prior video, in the States and in Canada, there's a way to sell your small business shares in a tax-free manner with capital gains. I'll stop here. Hope this helped. Really enjoyed making this video. It's been a pleasure. My name is Ronnie. I'll see y'all in the next video.